amongst the 21 decisions that have been cleared by Cabinet. Joining us now to discuss the implications of these decisions, we're joined by Adi Godrej from Mumbai, Mohit Saraf from Luthra Luthra, and Ashvin Parekh from Hyderabad. Gentlemen, appreciate you joining us here on CNBC TV 18. Appreciate your time, but let me go across first to Adi Godrej. Mr. Godrej, we were talking yesterday about your meeting with the Finance Minister and how you came away. We'll get to Mr. Godrej in just a bit, but Mohit Saraf, let me come to you first. Your quick thoughts as far as the companies bill is concerned, because the contentious CSR clause, and I'm reading out to you what the Ministry of Corporate Affairs has just put out by way of a press release. It says provisions to make expenditure on corporate social responsibility are mandatory, subject to explaining the reasons for shortfall. Does this mean spending has been mandatory, or is it what we understood it to be, that disclosure continues to be mandatory?
I think the disclosure is mandatory, but I think the more important part is that this is a beginning, and I think it will put a lot of pressure on corporates and particularly companies in India who are trying to attract a lot of private equity investment and FII investment to comply with this. And globally, I think companies feel that need to comply with that, and it's a very positive step. Even I would say the first step, what they've done is a disclosure norm. I think that should be probably welcome. Before, I think the entire policy, the boards of the companies, they all get matured and understand the implication, how to use it. I think this is a good first beginning step.
This is a first good beginning step. I just want to get your comments, Mohit, as far as private placements are concerned, because it says further clarification of provisions relating to private placement and removal of criminal liability in cases of technical default, etc. It doesn't go on to clarify very much, but it says that the amendments to the companies bill include further clarifications of provisions relating to private placement. This was a topic of much debate and discussion. Mohit, can you hear me?
Yes, I missed a lot of, I missed a lot of your comments.
Yeah, I was just reading out what the press release says in terms of private placement. It says among the amendments approved for introduction, a further clarification of provisions relating to private placement. Now, the issue with regards to private placement was one that was widely debated. What do you make of what they've put out?
I can't make it out, but I think what it is important is, at least what they are trying to do is, what is a private placement and a public placement. And I think the present Companies Act talk about that, more than 250 people, and we have a Sahara case in our background. So I think if they are crystallizing the thoughts and they are making sure that there's no gray areas in that, because the general public interest is involved, and obviously issues of corporate governance is involved, I can't really make out what really they mean.
Yeah, we can't either, because this is the press release that they put out. It doesn't really clarify very much. But let's go across to Adi Godrej. Mr. Godrej, we were speaking 24 hours ago, and you had emerged from your meeting with the Finance Minister feeling confident that the reforms agenda will continue. And they've made a sixer this evening. 21 some controversial proposals being cleared by Cabinet today.
Yes, I think it's a very good move. I think it will add to the confidence of the nation. It will add to the confidence in the GDP growth of the country. I think both outside and within the country, it will spur investment. So I'm very glad that the Cabinet has cleared a very large number of decisions today.
Mr. Godrej, yesterday when we were speaking, you said that the Finance Minister urged industry to weigh in on opposition, and you said that perhaps as far as some controversial issues were concerned, there seems to have been some breakthrough from the opposition. Insurance, pension, the BJP coming out and saying it will not support it in Parliament. Do you believe that even though Cabinet has cleared it, we will continue to see an uncertain future as far as these crucial reforms are concerned?
Well, the opposition will perhaps demur in the initial stages in supporting some of these bills. I do hope we can change their minds. I do hope that they put political differences behind in the interests of economic reform in the country. So clearly CII will try its best to convince the opposition to support the good measures that have been proposed.
what would be the message that investors are going to take away from this, Mr. Godrej? Because while the government seems to have its heart in the right place in terms of pushing ahead with the crucial reforms agenda, the fact of the matter remains that on the ground not much can change, because all of these bills need to go through Parliament, which is where they do not have the numbers. So materially, do you see investors really changing their mind about India?
Yes, I think so, because one thing is very clear, that the government is supporting reform. That itself is a very good move. And I feel some of these bills will be passed, because you can talk to the opposition, you can convince them. Things like the companies bill, for example, is on the lines of the suggestions from the parliamentary committee. I think pension bill was earlier supported by the BJP. In fact, they said that why isn't the government bringing the pension, FDI and pension bill to Parliament? So let's hope that some of these can be passed, and hopefully many of them.
All right, Mr. Godrej, appreciate you joining us here on CNBC TV 18 with your reactions on what's turned out to be a super Thursday for the reform agenda. Ashvin Parekh in Hyderabad, thanks very much for joining us. Long-standing demand to actually hike FDI and insurance from 26% to 49%. It's made a step in the right direction today, but the journey is far from complete. What is this actually going to mean for the sector?
Well, two or three things. One is quite clearly, there is a recognition. There has been a requirement, a demand from the industry to really look at the capital part. There are two or three components to this. One was earlier we looked at the IPO reforms, which the regulations came out, from the authority. Now this one certainly does give a tremendous amount of boost, to the capital mobilization for the sector. We've seen that both in life and general insurance, there has been a substantial requirement of capital that is essential for the growth of these two sectors within the insurance industry, and therefore it's a very positive move, I should say. There are a few things about the press note and some of the clarifications that the FM rendered just a little while ago, and I seem to be particularly impressed with the fact that he clarified at one stage whether he means FDI or he means foreign equity participation, and he said it is foreign equity participation. So I suppose we may have to really examine, this could really imply that the additional 23% could be in the form of either FDI or it could be in the form of FII as well. Both these measures, to my mind, total capping just the total foreign equity to 49% is far more progressive for the industry than saying 49 FDI. And here is where the difference lies, to my mind. What will happen is that if it was entirely 49 FDI, then it could have created a certain amount of a deadlock situation or an impasse situation. The articulation is
let me quickly, that's an important point that you make. Let me very quickly get Mohit Saraf to comment on that. Mohit, the fact that foreign equity participation has been capped at 49%, which is the clarification that the finance minister made, what do you make of it, and how do you see investors reacting to that?
If you look at all the JVs in India, I think there is really a requirement of a foreign direct investment up to 49%, not so much of an FII investment. FII, if they do 23% of an FII investment, again that would be an intermediate step before we get to FDI. And I would say it will still not ease off the pressure which the insurance sector is ready. If you look at all the JV agreements and all the operating insurance companies, they really require a promoter money and FDI up to 49%. And I think that what the government really need to do is not limit that to 26% and allow 23% of FII, and rather come up with a structure by which the 49% shareholder cannot abuse it. And I think that is more important than to stop and divide it into 26% FDI and 23% FII.
All right, we're still waiting to see the fine print because we haven't got the press release that the finance minister promised. But let me also get in Naina Lal Kidwai from FICCI. She joins us. Naina, I appreciate you joining us again here on CNBC TV 18. Again, as I was speaking with Mr. Godrej, we had the exact same conversation yesterday, and they're very, very clear that they want to go ahead. It doesn't matter whether they have the numbers in Parliament or not. How do you see the markets responding? How do you see rating agencies responding? How do you see foreign investors responding?
I think this is a very positive step, Shereen, as you're hearing across the board. Very important that we see this particular policy move. And the fact is that we shouldn't forget that enhancing the capital of our insurance sector and enhancing capital in the pension sector helps infrastructure. And you might ask, how does it help infrastructure? It helps infrastructure because we get sectors which get better capitalized. And by virtue of being better capitalized, we have more capital entering long-term investment. And in fact, the project finance space, our large projects all need big and longer-term money. So we should really be loading the growth of these sectors, which are capital-starved, needing money, with a view to getting the infrastructure sector and the long-term bonds that we need to fund infrastructure off the ground.
I don't know whether the infrastructure debt fund has finally been also given the go-ahead or not, because I didn't hear the finance minister say that, but that's the information that we had. It has been cleared. That is the understanding that we're now getting in. That's the information, Naina. The infrastructure debt funds have also been given the go-ahead by the cabinet. Your quick reaction to that?
Yeah, and I think this all suggests that there is a recognition that we need long-term capital for infrastructure. And we should not forget that both the insurance and pension bills assist in that. And of course, getting the infrastructure debt fund off the ground clearly helps in that direction. We know we need this money, and we know that we have infrastructure bottlenecks right now. Funding has not been a major issue to date, but it certainly looks like it would become so in the near future. And these steps are therefore critical if we want that $1 trillion which was actually set out in the Planning Commission to be a reality.
Absolutely. Naina Lal Kidwai, I appreciate you joining us here on CNBC TV 18 with your thoughts on what you made of the decisions that have been taken by the government. But Mohit,